All right, well, the financials led by PSU banks have seen outsized returns over the past year, but some of them have started to correct now in the last fortnight or so. To discuss how the next year is likely to look, we're joined by Saurabh Kumar, Executive Director, India Banks and Financial Research at JP Morgan. Saurabh, welcome to the show. Thanks for being with us and greetings of the season. This has been a rollicking ride for financials, but do you think the run on PSU banks is done, or do you see further upsides both on the price as well as on the earnings front?
Okay, thank you for having me on the show, and Happy New Year to you and your viewers. On PSU banks, we believe that there is still upside left. These stocks are coming up after almost a 10-year downturn. And if you look at broadly, at least the two frontline PSUs are already hitting normalized ROAs. We are seeing positive earnings revision for them. And this is a market where basically both credit cost is generally low across the board, especially in corporate assets, which is very good for PSU banks. And there is, in some sense, a fight for deposits, which again is positive for PSU banks because these are deposit-rich entities. And we are seeing the growth differential, the ROE differential narrow between PSU banks and private banks. That should mean that over a period of time, valuation differential will also narrow. So we continue to remain positive on the public sector banks as a space. There will be volatility, but generally we think the earnings traction here is positive.
Saurabh, hi, good morning. Prashant here. Now, can they, I looked at 1 year forward the price to book multiples for these PSU banks last week. And most of them are basically back at, or not most, I mean, there were two which I found which still had some distance to cover to get back to their previous peak multiples. Well, there was PNB and there was one more. But 4 or 5 of these names were already there or even past the previous peaks. Is this a much better positive cycle? How much should we rely on these past multiples as a guide to future returns?
So, on our assumptions, we are not back to peak. For SBI and BOB, we're probably back to averages. Peak is obviously quite some time away. And remember that when you're comparing peak price to book multiples, at least there is a subsidiary discussion subsidiary valuation which needs to be taken out at SBI. So if you adjust for all that, I don't think we have probably gone back to averages. And then from that average, if you look at actually the trading average between 2010 to 15 or 2002 to 15, take out the asset quality cycle in the middle, which happened 2016 onwards, then I think there is still some gap to go. Also, if you look at forward earnings, I think most of the market is looking at 0.8, 0.9% ROAs for most of these banks, whereas at least the two frontline names are already delivering 1%. There is scope for margin upside. So we should hopefully see maybe ROAs also kind of peak out at maybe 1.1, 1.2% levels. So you have both scope for both earnings upside, and multiples have not gone back to peak levels yet. At least for the two frontline, we are back to averages. But again, if you adjust the averages, take out the asset quality problem from 2016 to 20, there is still some distance to go to cover that ground as well.
Saurabh, morning, Rima here. Do you think this PSU upcycle, this bull run that we're currently seeing in the PSU banking stocks last for longer than, say, 6 months, 9 months? Do you think once the valuations catch up to their peak levels, and the catch-up is happening at a very fast pace, the kind of valuation re-rating we've already seen since September, do you think we're in for a 2-year, 3-year, 5-year kind of an upcycle in PSU banks, or it's going to be very short-lived? And your thoughts on it? Because if you look at the trend for the last 5 years, 10 years, PSU banks have hardly created wealth. The PSU Nifty banking index is only up 6% in the last 5 years.
Yeah, so I won't be able to comment on 5 years. So obviously, we need to watch these stocks. They give you higher volatility. But end of the day, what matters for a bank stock in India is book value compounding. For a PSU bank, this is just a function of the ROE. So effectively, these guys are able to compound, deliver sustainable ROEs of 14, 15%, then there is, at least from a valuation point of view, upside left. I would, however, agree that this year you've had higher credit growth, which has helped PSU banks. That will probably tail off into next year as both credit growth moderates and effectively, and the growth moderates at a slightly higher pace for PSU banks. But end of the day, the ROE, which is about 14 to 15% for most of these banks, we think if that sustains, then you will get your mid-teen kind of returns at some of the PSU banks, even when the valuations catch up to fair levels.
Okay. Let's come to now private financials, and I want to start with actually a non-banking name. Sorry, you cover Bajaj Finance?
Yes, I do.
This is one of the few years where Bajaj Finance actually will be, if it ends here, down for the year. Could you, what's your rating on the name, and how do you see prospects for that name going into 2023?
So we have a overweight on the name. For Bajaj Finance, what has mattered is, unlike banks, this stock has almost fully correlated to loan growth or AUM growth, as we call it. And we think that in the next 3 years, if this company can compound at 30%, which will be one of the highest loan growth in the sector, at least of all major private banks and NBFCs, we won't be negative on this name, simply because the growth and the ROE differential is pretty high, Bajaj versus the rest of the sector. The second piece is effectively, this is I would say, for a major NBFC or a major financial, where we are very positive on basically the digitization or the Bajaj Mall, Bajaj app that they're launching. I think if they're able to create value out of that closed loop ecosystem that Bajaj is implementing, then I think the multiples can upshift. It is already trading between a bank and a fintech, and we don't see, unless we see the traction on that piece roll down. If the current traction, what we are monitoring in terms of monthly average users, the downloads, the app store rating, both on Play Store and on iOS, that doesn't seem to indicate any negative momentum for us.
Okay, I'm glad you talked about valuations, right? Because the issue with some of these private sector banks, I mean, ICICI Bank, for example, of course, steady growth, steady profitability and all that. But I'm trying to understand whether there is any valuation upside, because ICICI Bank is now trading at, 3 times price to book as per September of this year. Do you think that there is enough in the growth for it to sort of move to a new paradigm as far as valuations are concerned?
So I would agree on the private banks that maybe there is not much left on valuations. You will just get the book value growth from here on. If you look at ICICI's valuation, it is almost fully caught up with HDFC Bank. Historically, ICICI had a valuation discount versus HDFC. Now that gap is pretty much over. So from where on, we just expect that ICICI should deliver a very steady ROA of around 1.92% and compound its book value again at that 16-17% odd level. And that should be your return. I don't think one can argue for a value re-rating from here on, especially when cost of equity continues to be very high.
Okay, Saurabh, we'll leave it at that. Thanks a lot for joining in and, speaking about the banks as well as the way forward, both for PSU as well as private. Despite the rally that we've seen in PSU banks, JP Morgan says that there could be more on the upside. And, that's a sector that they like. By the way, for the market, the mid-cap index has given up all of its gains, so don't lose sight of that. The index is now well in the red. It's very typical to what we've seen in the last many days. We start off with a bang and then we lose all of our gains. A lot of stocks under pressure, and especially in the banking pack, whether it's Union Bank, Dhanlakshmi, Punjab and Sindh Bank, a lot of these names are down anywhere between 3 to 4%. South Indian Bank is down as well, IDBI Bank too. So this entire lot is coming off a little bit. And sugar is a space that is under a bit of pressure, not so sweet perhaps today. But specialty restaurants will be raising 127 crores through the issue of warrants. The warrants will be issued to investors who aren't promoters. So after the conversion, the promoter stake will drop to 46.5% from the current 52.5%. To discuss this, we're joined by Anjan Chatterjee, the chairman and managing director at Specialty Restaurants. Anjan, thanks a lot for joining in. Before getting to the more yummier part of the business, let me just get this out of the way. Who are you issuing these warrants to, and what is the purpose of this fundraise?
The purpose is to ensure that the growth plans that we have now, because as you know, due to the pandemic, the plans were absolutely shut, and then we had an embargo on the growth. So post that period, when we have come back to a better cycle and also realize that it's a newer model for us, because it's not just the fine dine-in, it is also the delivery, which is become a new vertical for us. So the combination of hybrid, that is the fine dine-in and The delivery has given us better quarters, as you have seen over a period of last few months. And now it was important for us to get into a growth stage. Now, the growth stage needs funds. One part of the money which is lying with us will be actually getting into the renovation or complete changeover of the look and feel of mainland China, which is the #1 Chinese brand we have created. And then we have another one called Hakka, which is now partially cloud, which will also go. That's slightly for the mid and the lower strata of people. So we want to take also Asia Kitchen, which has gone to Dubai and other international destinations. So we actually want to concentrate on the Oriental area, which has been our forte. Besides, 10 years have passed, 9 years have passed, we've not been able to renovate enough. We were just about to do it before the pandemic. So we were waiting for an opportunity to do all this. So same store growth would have a 20% upside once we do these. We are very confident of that. And the wet-led part, which has been very, very low, our liquor to food ratio has been low. So now the trend has changed. People want a line of sight bar. We had dispense bars. So there's a lot of planning which was on. So at this point of time, we were sitting down talking about what to do. Then I met some of these investors who had come to us as a part of the franchise arrangement of Riyasa abroad. And in the process, they actually evaluated and they came in to invest.
We got that. But, just a follow-up. I mean, you said that you're looking to sort of get into growth mode in a big way. What would you be doing? How much would you be spending for renovation? Would you be putting any new restaurants on board? And are you comfortable with the promoter holding going down below 51%?
Yeah, we are very comfortable because the fact that we know that we've been in business for a long time and we can always change this over a period of time. But important thing would be that we are wanting to definitely look at and continue to dominate the Chinese space. And that is the reason we want to get into renovations and ensure that this becomes a more modern, because the world has changed over a period of time. And that's the 20% of the growth upside that we get from a same store is a big bonus for us because we have no added cost. Additionally, we also want to get into those spaces where we had to shut down because of pandemic. So there's a huge opportunity which we have vacated. For example, Noida, Gurgaon, I'm just giving a Delhi example, and maybe even in Bombay city, there are areas which we have withdrawn from, Calcutta, Bangalore, Chennai. So there's huge amount of opportunity for a mainland China Asia Kitchen, which we can dominate and be there. And we know the model, we've been there in this business for 30 years. And we anyway had some money lying in the treasury. So we said, why not bolster ourselves? And there could be an inorganic acquisition too. So, suddenly after the COVID, things have changed for not just us, the whole industry. So that bullishness has given us the growth expectations coming in. So we got the opportunity and we got HNIs to come in. So
Mr. Chatterjee, from what we can gather, there are multiple prongs to this growth strategy of yours. One is renovation of your existing stores. 2, you want to reopen some of the shut restaurants on account of COVID. 3, you're looking at international expansion as well, particularly for your Oriental brands. 4, there is inorganic plans on the horizon as well. And finally, you spoke about delivery as well. So that's a spare area that you want to scale up. So this is the 5-pronged approach, right, for your growth strategy.
Yeah.
So,
yes.
That's a lot, right, on your plate. But you're raising 127 crore. Is this sufficient? Do you think you will require more funds? Can you tell us who are the investors who will be pumping in money into this?
See, this is not enough on our plate because vertical of delivery doesn't need too much of money. It's just a cloud kitchen base.
Okay.
We have around 130 crores lying in our treasury. So basically, it makes around 260 crores, kacha pakka. So I'm saying that that's good enough for us. So we don't want to borrow funds or keep, diluting our equity for no reason. There will be another chance once we have a, objective which is met. Tomorrow we can do that. So that's not too much of a task for us because putting up a mainland China or an Asia is just saying which we've done it and been there for a long, long time. And that's the primary area of growth. There are master franchises which are coming in the international area. So I think we will be able to do it, and we've not taken a horizon of just 6 months or so. We're talking about the next 2 years. So that's a long time. I'm very confident that we'll be able to do it.
Okay. Just wanted to mention to our viewers that Sula Wines has listed, and as we were telling you, it was expected to be a muted to disappointing listing because of a couple of reasons, right? I mean, the stock, by the way, is now down about 2.5%. Of course, the company has 60% market share in the India wine business, but that itself is a very, very small portion of the alco beverage market. In any case, the fundamentals of the company have not improved over the last many years. The revenues have been absolutely stagnant for the last 3 to 4 years for Sula, and that I think is a bit of an issue. The money will not go to the company. It's a complete offer for sale, so that's another thing that perhaps is bothering the street. And debt on the books is also an issue perhaps for Sula Vineyards. So just keep an eye out. FY22 debt was about 240 crores.
It's red, right? Not red wine.
Someone said, right? Drink the wine, but don't subscribe to the IPO.
But it's the first of its kind, a pure wine company. So, points taken, Sonia, what you said. 350 on Sula. It's a new listing, and that's a great thing. Recently, we've had so many new industries which are now represented via listed entities, and that is only set to grow manifold. So the market gets wider, deeper, more representation from different, even niche sectors, etc., coming through. So that's the market for you. We had a bit of a bounce. Anjan, great to have you with us here. Thank you very much, and all the best for the revamp and all the efforts that you're making. Appreciate it.
Thank you.
Thank you. Well, the market did bounce about 50 points. This is the second leg of the bounce that we saw, which has already been sold into. The initial sort of gap up got completely sold. We were down. Then we had, I think, a 40-50 bounce, which is also now being given up. So it's very volatile. Just 2 or 3 points is what we have in the index, exactly at 18,202. We had the management of Thyrocare with us in the morning. Look at Thyrocare stock. It's up 8.5%, 760. This is after yesterday's 15% move. So that's a very large move coming through. I don't think you're seeing a similar move on either Dr. Lal or on Metropolis. Thyrocare and Metropolis, of course, are the bigger underperformers of the lot out of the three. No, we're not. It's only on Thyrocare, so it's not as if the path labs are all surging like what we had yesterday. Apart from that, I mean, in terms of very large moves, there is Solara, which is up 6% on volumes. So, just highlighting. And you got Aster DM, which is up some 5% as well, which is coming up on my screen at least. Vijaya Bank is up 5.5%, which is coming through. I mean, that's it. Otherwise, I mean, market breadth, etc., it's completely flipped. Look at the NSE advanced decline ratio. There are 1,700 stocks lower and about 400 stocks which are higher, 4:1 in favor of declines. And that crossover happened early on in the session. We'll take a break. We are back, and we'll be joined by Mitesh for some technical trading ideas, anything fresh in the Nifty that he might have. Stay tuned for that. Okay, welcome back. So the market's down, 8 points or so. And already, we've been just trading for 45, 50 minutes so far. There has been, 70-point cut, 70-point bounce, then a 70-point drop, and then a 50-point bounce and a 50-point drop. So this is quite a bit of volatility to digest. Mitesh is with us. We were talking about this earlier, Mitesh. Wait, don't jump in straight up. Let the market tell you. It's not telling you very much, right, in terms of a specific, definitive trend.
You're right, Prashant. It's all over the place, and I think, very difficult to guess. One, the morning gap ups or gap downs, and secondly, I think the immediate reaction post that. I think I wouldn't have expected a 100-point gap up yesterday evening, and I mean, yesterday evening, I wasn't expecting a morning gap up and then this fierce sell-off. So I think it's a very difficult market to trade into, but the indicator setup is slightly on the negative side. And yesterday we had some breakout on the VIX chart, which means that there's a stronger possibility of a new low being made. The levels could be closer to about 18,130, and then maybe in the worst case, 18,000 to about 17,950 zones is what I'm looking at. So trading with mild negative bias on the index by selling call options. But on the stock side, I have one buy and one sell. UPL has broken down. That's a sell with a stop at about levels of 755 for targets of 710. And Cipla, again, a healthcare and a pharma name remains on the buy list. Keep a stop below levels of 1120 and look for targets of 1180.
Okay, thanks a lot for that. By the way, the new listing, Sula is now down almost 4%. So it's had a pretty disappointing listing over there. Volumes are also piling up on that one. This IPO is largely an exit route for one of its largest investors, Berlin West. So disappointing listing coming through for Sula. But let's shift focus now to the commodity markets. Manisha Gupta is with us. Manisha, what's the one commodity that you're tracking today?
Well, I'm looking at the festive cheer and the kind of run-up sugar has seen in midst of all of this. If you look at the international markets, we are looking at raw sugar prices now trading at around 6-year highs. And we have seen 20.80 cents per pound being touched in the international markets there today. Well, the support comes in as we are looking at Brazilian real continue to gain up. That has been taking those prices higher. And then there are supply disruptions coming in from Brazil itself. But while Brazil is the second largest producer of sugar, we have seen sugar producers also face issues. So whether it has been about other countries like Thailand, Australia, Central America, all of there you have seen adverse weathers and the support in prices. In the international markets, we also are looking at Europe and Iraq looking to buy sugar in the international markets. For India as well, while the export numbers look good at 5 million tons, that has already been contracted. But what actually has been shipped until now has been less than 1 million tons. So the international markets taking support from that as well. For the Indian market, the positive also comes in from the ethanol story, where the GST cut to 5% from 18% for private companies, and public sector is also supportive. Government also has allowed 20% blending from 15th of December, and that has been positive. Remember, the government also did advance or prepone the blending targets to 2025 at 20% as well. So that has been supportive. So not just that India is the largest producer of sugar, but the biggest consumer of sugar as well. And for the festival season in this quarter, we are looking at very strong numbers on an year-on-year basis.
Thank you very much for that. But today, the sugar stocks are under pressure. They've had a phenomenal run. But Sakti Sugar, Simpauli, Bajaj Hindustan, Triveni, Sri Renuka, all down between 3 to 5%. But let's get to some of the other big movers. Nimesh is joining in, and he's going to be telling us about the changes that Chris Wood has made to the India long-only portfolio. Nimesh?
Hi, Rima. So, he's made changes to the two sets of portfolios. One is the only long-only portfolio, where he has cut down the weight further by 1 percentage points on Bajaj Finance. However, he's made some interesting changes in the India long-only portfolio, and there Chris Wood has added 4% weight to REC. That's the first time that REC has got added to the India long-only portfolio. And he's done this by reducing the weight on 4 stocks, which is HDFC Bank, Bajaj Finance, ICICI Lombard, and ICICI Prudential Life. So the two insurance companies, HDFC Bank and Bajaj Finance. So he's cut the weight there by 1% each. Now, if you look at the India long-only portfolio of Chris Wood, this is the 4th stock within the PSU basket. The highest weight in that basket is on ONGC, 10% weight. The second highest is SBI, 6% weight. REC is the new addition now with a 4% weight. And he also holds Concor in his long-only portfolio with a 4% weight. So, again, it looks like the PSU is now the theme for most of the global investors as well. And now Chris Wood has added REC to the India long-only portfolio with a 4% weight.
All right. Well, thanks a lot, Nimesh, for that. Let's slip into a quick break on that note. On the other side, our special segment is The Economy. Lata will connect with Dr. Anurag Agarwal of Ashoka University and Dr. Chandrakant Lahariya, the epidemiologist and health systems expert, to discuss the rising